Good afternoon, everybody, and thank you for tuning in to Fundera's live Q&A session on Paycheck Protection Program loans and getting your loan forgiven. I'm Shannon Smith, part of Fundera's webinar team, and I'm hosting today's webinar alongside Fundera's PPP loan forgiveness expert and Senior Director of Finance, Justin Richley. We host these sessions every Tuesday at 1 p.m. ET to provide any updates about the program and answer any questions you may have. You can submit questions ahead of time using our Google form, and please remember you can also submit them live during the webinar using the Zoom Q&A box. If there are any questions we don't get to during the webinar today, we'll also include them in our next session, which will be on Tuesday, July 14th. If you'd like to get in touch in the meantime, you can always find our team on Twitter or email our customer support team at support@fundera.com. Also, our webinar team can be reached via email at webinars@fundera.com. As a reminder, we'll send the slides, the recording, and any additional resources in our webinar follow-up email today. We'll also include a link to a survey from our team about your thoughts on PPP loans and loan forgiveness. If you happen to have 2 minutes to spare, we definitely appreciate your anonymized feedback. I'll also drop this PPP loan survey in the chat. With that said, I'm going to hand things over to Justin Ridgely, Fundera's PPP loan forgiveness expert, who is here to answer your questions and provide any updates to the program. Thanks for being here, Justin.
Of course, thanks, Shannon. So the only the update we have today is not so much on forgiveness, but there was a big update at the end of last week, which was that there was a bill put forward by the Senate and then passed in the House and then was signed by President Trump on July 4th, which has authorized the PPP program to be extended through August 8th. So previously, applications, the last day you could submit them was June 30th. And there were still some people that hadn't applied yet for whatever reason. And we saw a flurry of activity through us on June 30th. And a lot of banks stopped even processing them, earlier in that day, despite the window being open until midnight. So the good news is that if you haven't, received a PPP loan, then you still have time, and you can come to Fundera. You can go to a bank you already work with, but there is over $100 billion left in the program, so there's plenty of money, and you have time now to get that loan if you don't have it. So that's a pretty big update. But with that said, Shannon, I think we can go straight into Q&A and get into the questions that were submitted or any that were submitted live today.
Great. So to begin, we actually do have a question that was just submitted, and this person would like to know, where do I find my SBA PPP loan number and the lender PPP loan number?
So I assume this is someone that has received a loan. I would anticipate that those two numbers would be on the kind of the loan documents that you received from the lender. I think they should be listed on there, from what I understand. I also think the SBA published. Well, it depends on the size of your loan, I guess. If it was over 150,000, you can pull that data actually directly from the SBA's website, because yesterday all the loan data, including size and entity for loans over 150,000, was published publicly. But I think the best place, to answer this question is that you should either go to your loan paperwork, and if it's not there, you should ask your lender directly.
Great. We also have a question that just came in, and this person would like to know whether Fundera is still accepting applications for PPP loans.
Yes, we are. You can go to fundera.com/PPP and get started.
Great. Next up, we're going to jump to some questions that were submitted beforehand. And this first question is from someone who wants to know about when they have to apply for forgiveness. They would like to know whether they can submit a forgiveness application before the end of their covered period, as soon as their funds run out, or if they have to have, if they already have the proper documentation already, whether they have to wait.
If you have exhausted your funds, on forgivable categories, mainly payroll and non-payroll, and you've reached that 60% threshold of payroll expenses, and you want to get your forgiveness done, then you are allowed to apply before the end of your, if you're using the 24-week covered period. In some cases, this makes a lot of sense because, maybe you've gotten your employee count back up to where it was before February 15th, and you want to take advantage of not being, penalized for reducing employees in the interim period, or you just want to get it done with, or you want to get it done before, there's a huge influx of probably applicants, which you think will happen, at the end of the year. Then I would definitely encourage you to, this person asked this question, to do this. I think the only issue you could run into potentially is if the bank itself is not, that you took your loan from, is not ready to receive your application for forgiveness. And since that will have to go through them, I have heard, that some banks are opening their applications up now. Some are, it's, mid-late July. Some are even in August. And I think that's because, a lot of banks have kind of banded together, asked the SBA some clarifying questions. They also have needed time to build out their online experience, because the way this works is you're not going and downloading the SBA's application typically and submitting it. You're going to go, to a website probably, go step by step through an online kind of, user flow, input information, and then they'll, use that to generate your forgiveness application on the back end. And it takes time to build those types of experiences. So I think as soon as your bank is ready, then if if you're ready to apply, I would go ahead and do so.
Great, thanks for going over that. This next question is from someone who would like clarification on the FTE period. Their question is, there's reference to comparing FTE headcount during the covered period to February of this year, but previously the FTE formula was based on the period of February 15th through June 30th of 2019. Which period do we need to base FTE to?
So there's two concepts, two kind of time concepts with the FTE count. The first part of it is you're calculating, it's an average number of FTEs in the covered period versus a reference period. Reference period, as mentioned, let me just find where I wrote this. Yeah, the period that you kind of compare to is this reference period. So say you averaged 10 employees during your covered period, meaning the time, that 24-week period. And you can then compare that to either that 2019 period that was mentioned in the question, which is February 15th, 2019 to 6/30/2019, or you can compare the covered period to January 1st, 2020 through the end of February 2020. And so what you'll want to do there is, typically it's going to make sense for any growing business to use the earlier period, probably because the business was smaller. But the goal here is you take your average of the current time period and you compare it against the lower average you have from a previous period. You don't want to compare it against a higher average because you're more likely to have reductions penalize you. The February 15th date is a little bit different, where it says, okay, you've calculated your average, it's lower than the reference period, but you think you can get back to the level that you were previously at before February 15th by either when you submit your application or by December 31st, 2020. And if you do so, even though your average might be less than the comparison period, you will still not be penalized. It's this concept of the safe harbor. So say, as an example, that I have, I use the 2019 reference period. My average employees there was 10. My average employee FTEs during my 24-week period was 9. But then on February 15th, I had 10 employees. And then I was able to get back to that level of 10, before December 31st, even though I averaged less than that, then you would still be eligible for 100% forgiveness. So it's kind of like, the first is the way you measure if you will potentially be penalized. And the second is kind of like a get out of jail free card to restore that February 15th level by the end of either your covered period when you apply or December 31st. Meaning you could actually restore it to that level after your covered period ends, as long as you do so by the end of the year. So it's quite confusing. But those dates are kind of two separate concepts that kind of work with each other, but are kind of unrelated.
Great. As a follow-up question, we have something that just came in live. This person would like to know, if I'm using a 24-week covered period, does that mean I need to use the entire 24-week period for payroll payout, or can I pay out over a shorter period?
You know, I think you could pay out over a shorter period. You know, there's nothing against paying bonuses or anything like that, or just the fact that you run out of, you know, you pay normal payroll and you exhaust the funds before 24 weeks. There's nothing that says you have to, like, you know, reduce payroll so that it spreads evenly over 24 weeks. You definitely don't have to do that. I think for most people, you know, that I've talked to, you know, 24 weeks is a long enough time to just pay normal payroll and have that, you know, basically make up either a large percentage, over 60%, or even most of the time 100% of the loan amount just using payroll. So you theoretically, you could pay it out more quickly. You could stretch it out. It's kind of up to you, but I think, you know, just doing your normal payroll cycle and paying people what they're owed and not doing any, you know, funky payments is probably the best advice I could give. And again, that's just my opinion. But I think, you know, it's a good best practice. And then the other thing you have to watch out is if you have any employees that are hitting this $100,000 cash compensation limit, which means that the amount you say that, you know, you pay someone the equivalent of, you know, for over 3 months, that if you annualize that, it would be over 100K in cash compensation. Only that level up to a kind of 100K run rate is allowed to be forgiven. So you can't pay someone the equivalent of like $200,000 a year and then, you know, get all of that forgiven. There are limits to what you can pay out.
Great. We actually do have a question from someone about that 100K max. They would like to know, does the 100K max per person include vacation payouts and severance payments?
Yes, it does. It includes, you know, any what I'll just kind of highlight here, if you have it on the screen, is this is, you know, everything that goes into cash comp. This is salary, you know, hourly wages, tips, commissions, bonuses, hazard pay, paid leave, which includes vacation, family, medical, or sick leave, and allowances for dismissal or separation, which is severance. These are all included in this number that is capped at 100,000 on an annualized basis.
Next up, we have a few questions about self-employed individuals. The first one is, if self-employed individuals can get the full 2.5 months loan forgiven via owner compensation replacement on a 24-month covered period, why would they ever want to elect for an 8-month covered period instead?
So I assume they're saying I think I heard 8 month and 24 month. In reality, this is 8 week or 24 week. They're saying if they could pay out the whole amount in 8 weeks, then why would they opt for 24 weeks? Then I guess the answer is they wouldn't have to. I would be somewhat surprised if they could pay that all out during that short amount of time, depending on what the loan itself was based on, since it was based on kind of, you know, 2.5 times an average monthly payroll. And it's hard to do 2.5 months essentially in a 8 week or 2 month period. I think that, you know, if you can fit in the 8 week period, then by all means apply. But the 24 week period probably is easier for most people. So not sure I answered that question completely, but you don't have to, if you got your loan before June 5th, you can use either. If you got your loan on June 5th or later, you have to use 24 weeks as well.
Thanks for clearing that up. The next question is about documentation. What documentation do self-employed individuals need to submit with their loan application if they'd like to get the full 2.5 month loan forgiven via owner compensation replacement?
Yeah, so, you know, this one is one we get into a lot on these webinars. It's it's how do you create documentation when you're essentially paying yourself. I think the methods that I've previously mentioned, and I continue to have not heard a better solution to from the SBA or banks or otherwise, is one, if you took the payment into a business account, you could pay yourself in the personal account and use those transfers as the records. You may also just have to create a simple spreadsheet that shows when you are booking this expense to yourself, even if you're using one account. I've heard of people writing themselves checks out of a single checking account. You could also theoretically move the money from a checking to a savings account. Anything to create a record of replacing your own income as a self-employed business owner. And so there, given that you're not going to get you're not getting any sort of 1099. You're not going to have any tax forms that are ready, until the end of the year. I think this one is kind of on the borrower or business owner to come up with a creative way to create a paper trail around paying yourself this compensation. There hasn't, like I said, been any official guidance on what will be accepted from banks, and I know that banks have asked the SBA for clarity on this because they're not sure what to ask the business owners that they lent to yet for, because there's obviously you could go a lot of different directions with this, and it would be best if there was a maybe some sort of form put out where you could just write this in, or maybe some sort of best practice that the SBA tells the banks and they include that in their application process. But we don't know that yet. And just to reiterate, like I said before, there's not too many banks that I've heard of that are accepting applications right now. So I think that many are waiting on clarification on this and other questions before they open up their forgiveness application process.
The next question we have is from someone who wants to know if there is a different deadline for self-employed individuals to submit their loan forgiveness applications.
No, there's not. It's the same for everyone. And the deadline is essentially, I believe, 10 months. Well, theoretically, you could apply anytime during the duration of your loan, but 10 months after your covered period. So if your 24-week period ends, say October 31st, you have until the end of the following June before you would have to start paying any interest or principal to submit. If you don't submit by then, you'll just have to start paying on the loan. But you can submit, any time after that. There's no difference for self-employed or other types of businesses.
Great. And I know you covered this before, but we do have another question that came in live.
Sure.
About payroll. They would like to know, if you were running payroll on a monthly basis pre-PPP and then receive a PPP loan, is it necessary to continue on monthly payroll, or can you switch to weekly or biweekly payroll?
You can, there's no guidance that you have to maintain a certain duration of payroll cycle. You can switch to anything you want. There was a rule that there is a rule about what you can count in the period from just before you got the loan, if depending on when you start your payroll covered period, and whether you have a 2-week or quicker payroll cycle. But theoretically, there's no rule against switching your payroll timing. It's not an issue.
Great. Next up, we have a couple questions about rehiring employees. The first question is, do you need to try to rehire employees that quit during their furlough? And also, what is considered a good faith certification?
So if an employee, do you need to rehire? Okay, the question is, if you are at a lower level of employees than the reference period you're comparing in. So if you're looking at your average FTEs and you're saying, I'm now lower than my comparison level, then you could potentially not get full forgiveness. So you say, okay, well, why do you have a lower level of employees? If you let these employees go, then yes, it's on you to rehire to the same February 15th level, by either when you submit the end of your covered period or by December 31st. And so that will be on the business owner to do if these employees were let go by the business at the business discretion. Now, if they quit, were fired for cause, or in the case of calculating FTEs, were had a reduction in their hours and then did not, basically the hours were bumped back up and they didn't accept it, then all of those things will not count against the business owner. I think the good faith part of this is saying, okay, well, I did lay someone off, but I am attempting to hire people back and I'm making a good faith effort at doing so and I'm unable to fill the position. That is also allowed and you will not be penalized. The question of what is a good faith certification in that sense, which I hope that's what the question is asking, is still quite unclear. And this is another point along with kind of that self-employed question I was talking about earlier, that banks have asked the SBA about how business owners are going to prove this so that it doesn't penalize them, because this question comes up quite frequently, and there are some cases where it's hard to find people even in this job market, and those employers shouldn't be penalized for that. But if you can imagine, how one would even prove that, it could be quite difficult. I mean, what do you point to? When you posted a job posting, how many interviews you did, who do you talk to? I mean, it's quite complicated. And so I think, my guess here, and again, this is just my opinion, is that this will be a good faith certification in the way that says, hey, I tried to do this. I'm not going to provide, a bunch of random documentation because it would vary so much by business, and you're just kind of you're representing that you did this, and you're saying you're not lying, essentially. So that's what I imagine it's going to be, because the actual proof of it would be so complicated and difficult. And so that's what I assume the good faith certification they're talking about is.
This next question we have is from someone who owns a movie theater that is currently closed. They would like to know if they can use the funds from the PPP loan anytime during the 24-week period of the forgiveness window.
Yes, I mean, that was essentially the point of lengthening this window, that there were businesses that were forced to be closed, and if they had to spend their money during a shorter period, then they would essentially only have to go pay employees that weren't working. And, while that's a good source of income replacement for those employees, they could, be let go, collect unemployment potentially during that time. And then when the business is ready to open up at a later date, then those funds, the PPP funds, could be used to get the business back started, which, helps keep more businesses afloat. So that was kind of the point of the 24 weeks. So the answer to that question is yes, you don't have to use the money in a, spread over the 24-week period. If you're opening, say, in July, or the end of July even, and you've got a couple of months in your covered period to spend that, then you just have to try to spend all the money, since you're working within like a shorter time frame. Like if you have a 24-week window and you were closed the first 14 weeks, then you've got to spend it in 10 weeks. So that's the only potential, hiccup you could run into. But, aligning your use of proceeds with your business activity is probably a good idea there.
Next up, we have a question that was submitted live, and this person would like to know, when paying out retirement or medical coverage for employees, can those amounts be included as part of the single paycheck to the employee, or do those payments need to be dispersed separately, i.e. into a 401k account, etc.?
So the way I understand how this works, we're talking about these costs here, health insurance, employer paid health insurance, employer paid retirement contributions, is that by default, these are payments that go directly into these accounts, whether that's directly to the health insurer, directly into HSA, directly into a 401k matching program, by which there's a deduction that the employee pays out of their paycheck, and then that's matched by the employer straight into that retirement account. That is what's allowed. So I think in terms of, what your what would fall under this, it's more the latter of in the question, where this has to go directly to these vendors. It's an employer, it's worded as an employer contribution to an employee retirement plan. So anything that kind of is in the paycheck and kind of goes to the employee at all is not, directly is not something that is part of this. It could be, part of gross compensation, but it wouldn't be a carve out for, retirement contributions paid by the employer.
Great. This next question is from someone who would like to know if all the funds can be spent on payroll and still be forgiven, and if that is a straightforward process for getting forgiveness.
Yes, you can use 100% of your funds on payroll and get that forgiven. In fact, I think, is that a straightforward process? I think that, you have to use 60% of your loan on payroll to get the whole thing forgiven. And so if you can use 100%, then it would be more straightforward than trying to use, 80% on that plus rent plus other stuff like utilities as well. And so if you can spend 100% of your loan on payroll, then it would be more straightforward insofar as you have to do only one type of documentation. And that's going to be, your payroll records of some kind, or whatever you use, tax forms potentially to prove what you paid out. And I think it would be, more straightforward to do 100% payroll than to, like I said, split it up amongst categories.
Great. And moving back to the topic of rehiring, we do have a question that was submitted live, and they would just like clarification on if they were to have an employee who voluntarily resigned, do they decrease the average FTE in the reference period? So the denominator and the FTE reduction quotient. Basically, they're asking, do we just remove the employee who resigned from the entire equation?
Let me think about that for a second. So if the employee quit and you make a good faith, you're certified that you make a good faith effort to rehire someone in that position, and you cannot, then the way this works is, I'm pretty sure it doesn't get you out of, like, it doesn't reduce. Okay, so I'm tripping up over my words here a little bit. Sorry. It wouldn't reduce it wouldn't impact the quotient. I think the way it works is that, when you're going to certify that, like, say you had 10 employees on February 15th, and then, you average less than 10 during your covered period because this person quits and you can't hire someone back in that role, you end up with a lower average than 10. And then you would be, that quotient would reduce your forgiveness amount. However, I believe how this works is then, it looks at the safe harbor and says, okay, well, you'd actually would be at 10 employees if this person hadn't quit. So therefore, the reduction quotient doesn't apply. I'm pretty sure that's how it works. I don't want to mislead this person at all, so I'm hesitant to say any more, but I'm fairly certain that that's the way it works, and it's not like you just forget that they existed for the purpose of calculating the quotient. You use it more in the safe harbor provision to kind of negate the negative impact of that quotient.
Awesome. Thanks for going through those questions, Justin. We are running up on time, but for any questions we didn't get to during the webinar today, you can always submit new questions using the Google form provided in the follow-up email, as well as reach out to our team using the email address webinars@fundera.com. So please be sure to check your inbox for a webinar recap email later today. And thanks again for joining us. We look forward to seeing you next week.